This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil stockpiles rose unexpectedly last week, building for the first time since late June, while gasoline and distillate inventories fell more than forecast, the Energy Information Administration, EIA, said on Wednesday. Crude inventories rose by 1.36 million barrels to 430.7 million barrels in the week ended August 9, the EIA said, compared with analysts' expectations in a Reuters poll for a 2.2 million barrel draw. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 1.7 million barrels, the EIA said.
China's oil refinery output in July fell 6.1% from a year earlier, official data showed on Thursday, down for a fourth month as thin processing margins and tepid fuel demand discouraged production. Refiners processed 59.06 million metric tons of crude oil in July, data from the National Bureau of Statistics showed, equivalent to 13.91 million barrels per day, BPD, the lowest since October 2022. Output for the first 7 months of the year was 419.15 million tons, or 14.37 million barrels of oil per day, down 1.2% from the corresponding period last year, the data showed. This is the second consecutive month the data has showed the year-to-date volumes have been down from the year-ago period since the end of 2022, according to Reuters records.
Moving on to the top news in the energy sector.
Oil prices ticked up on Thursday as optimism built that potential U.S. interest rate cuts will boost economic activity and fuel consumption, but concerns over slower global demand curbed gains. Brent crude futures were up 51 cents, or 0.6%, at $80.27 a barrel at 11:07 GMT, recovering some of the previous day's losses. U.S. West Texas Intermediate crude futures were up 47 cents, or 0.6%, at $77.45 per barrel. U.S. consumer prices rose moderately in July and the annual increase in inflation slowed to below 3% for the first time in nearly 3.5 years, reinforcing expectations the Federal Reserve will cut interest rates next month.
Norwegian oil and gas investments are expected to hit a record this year and stay at elevated levels in 2025, driven by ongoing field developments and rising inflation, a National Statistics Office survey showed on Thursday. Norway in recent years sanctioned a string of new field developments as companies took advantage of pandemic-era tax breaks to fast-track projects, part of its strategy to extend oil and gas production for decades to come. The country's biggest business sector now expects to invest a record 257 billion Norwegian crowns in 2024, up from an estimate of 246.9 billion crowns in May and exceeding a previous all-time high of 224 billion crowns in 2014. Next, we have the top news in metal markets. China's crude steel output fell in July for a second month, declining by 9.5% from June, official data showed on Thursday, as many steelmakers carried out maintenance work amid a widening of already negative margins. The world's largest steel producer made 82.94 million metric tons of crude steel last month, data from the National Bureau of Statistics showed, down from 91.61 million tons in June. July output, the lowest for a single month since December 2023, was down 9% from a year earlier, the data showed, surprising analysts who forecast a modest annual fall.
China's coal output rose 2.8% in July from a year earlier as mines ramped up production to ensure steady supply amid record-breaking heat, Statistics Bureau data showed, even though thermal power output fell while hydropower generation surged. The world's largest coal producer mined 390.37 million metric tons of the fuel last month, according to the National Bureau of Statistics data on Thursday, down from June's 405.38 million tons, which was the highest level since December 2023. China's national energy regulator said late in July it was coordinating power plant coal inventories to keep them at a minimum of 200 million tons because of continuing hot weather.
We will now look at the top news in the agricultural sector.
The lower cost of growing soy versus corn, Floods in some areas and a quick winter wheat harvest drove the U.S. government to raise its soybean production forecast to a record high this week, farmers and analysts said. A record harvest from the world's second biggest soybean producer would contribute to larger supplies of the oilseed, used to make biofuels and livestock feed. Global grains markets are in oversupply after several years of disruption and tight supplies due to the pandemic and then the war in Ukraine. Large corn and soy crops globally, as well as feeble demand from exporters and domestic processors, have driven prices to near 4-year lows and led to a rapid decline in U.S. farm income forecasts this year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.